A trillion-dollar Wall Street firm just named Shiba Inu in a formal SEC filing alongside Bitcoin, Ethereum, and Solana. This token started as a meme. Now it sits on the same eligibility list as the biggest names in crypto. Something big is shifting. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. To understand the weight of this development, you need to know what kind of company is behind it. According to reports, the firm involved is an 87-year-old asset management giant based in Baltimore, Maryland, that oversees roughly $1.8 trillion in client capital. The company built its name managing mutual funds and retirement accounts for millions of everyday investors across the United States. Its decision to step into digital assets is not a gamble. It is a calculated move backed by years of internal research and growing pressure from clients who want regulated exposure to crypto without holding the coins directly. On February 17th, 2026, multiple sources confirmed that the firm submitted an amended registration document to the SEC for a product called an active crypto exchange traded fund. This is not a passive fund that blindly follows an index. It is an actively managed vehicle, meaning professional fund managers will decide how much of each asset to hold and when to adjust those positions based on market conditions. The stated objective, as outlined in the document, is to beat the performance of a major crypto index over a period of 1 year or longer. The most significant detail in the filing is a list of 15 digital assets that meet the fund's qualification standards. Bitcoin and Ethereum sit at the top, which is expected, but further down the list, alongside names like Solana, Cardano, Avalanche, Polkadot, Chainlink, Hedera, Litecoin, and Dogecoin sits Shiba Inu. According to regulatory filings, this is the first time a token that started as a community-driven meme experiment has appeared in a formal eligibility list for a United States registered exchange-traded fund. The filing makes clear that being on the list does not guarantee the token will receive any allocation. What it does is define the boundaries within which the fund's managers are allowed to operate. They can choose to include Shiba Inu in the portfolio or leave it out entirely, depending on their analysis, but the fact that it passed the qualification filter at all represents a major shift in how traditional financial institutions evaluate digital assets. To make the cut, an asset must first be recognized as a commodity. It then has to meet at least one of 3 additional requirements. It must either trade on a platform that belongs to a recognized surveillance group, serve as the basis for a regulated futures contract with at least 6 months of history, or account for at least 40% of the net asset value of an existing exchange-traded fund. What this means in practical terms is that trading volume, exchange access, and regulatory visibility now carry more weight than origin. A token that began as a playful experiment can sit on the same eligibility list as one worth over $1 trillion, provided it meets the structural criteria. Analysts note that the presence of Shiba Inu in this framework suggests that high-volume tokens with deep exchange liquidity are now passing institutional screening processes that were once reserved for blue-chip digital assets only. The amended filing was also confirmed by the official account of one of the listed assets on February 16th, which shared the relevant section of the document. Separately, public regulatory records show that the Commission has set February 26, 2026, as a date by which it must either approve or disapprove the proposal or open formal proceedings to evaluate it further. This means a decision or at least a procedural update is just days away. When the original filing was first submitted in October 2025, a senior industry analyst described it as a semi-shock, noting that the firm ranks among the top 5 active managers in the country by total assets. Another financial commentator added that a company founded in 1937 is now building out the full infrastructure to handle crypto trading, and that ignoring digital assets is no longer a viable business strategy for legacy firms. The filing also outlined that the fund would list on a major exchange under a specialized rule for commodity-based trust shares, which is the same pathway used by Bitcoin and Ethereum spot funds already trading in the United States. That detail matters because it places this multi-asset product within the same regulatory infrastructure that has already attracted billions of dollars in institutional capital since early 2024. What makes this filing different from previous crypto product applications is the active management model. Most cryptocurrency exchange traded funds currently on the market are passive, meaning they simply hold the same coins that appear in an index. This fund gives its managers the power to overweight assets they believe will outperform and reduce exposure to those they see as weak. Sources suggest the fund is designed to hold between 5 and 15 digital assets at any time, though the filing states that the number could go above 15 or drop below 5 depending on conditions. If Shiba Inu is selected for the initial portfolio, the firm would purchase and hold the token directly, giving institutional investors a regulated pathway to gain indirect exposure without ever touching a crypto wallet. That alone could generate meaningful buying pressure if even a small fraction of the firm's $1.8 trillion asset base gets directed toward the fund. The broader significance extends beyond just a single product. If approved, it establishes a precedent that community-originated tokens can earn a place inside mainstream financial instruments. That would likely encourage other asset managers to include similar assets in their own fund applications, setting off a chain reaction across the industry. Community trackers showed that the token already has a regulated exchange-traded product in Europe through a Swedish-denominated offering, but this would mark its first recognition inside a United States registered fund structure. As per market data, the token is currently trading around 657 units, with a total market value of approximately $3.87 billion and a circulating supply of roughly 589 trillion tokens. Daily trading volume sits near $160 million. The broader crypto market remains under pressure, with sentiment indicators showing extreme fear and Bitcoins struggling to hold key support levels. Over the next 2 to 4 weeks, the regulatory deadline on February 26 represents the first major catalyst. If the commission opens an extended review period, it could delay momentum. But even a procedural acknowledgement would keep the fund narrative alive in the market. In the bullish scenario, a positive signal from the regulator combined with growing awareness of the filing could push the token toward the 720 to 800 unit range. In the bearish case, broader market weakness or a flat regulatory response could keep the price anchored between 600 and 650 units. The key question is simple. Does this filing represent the beginning of real institutional demand for Shiba Inu, or is it just another name on a list? Where do you see this going? Drop your thoughts in the comments. One of the oldest investment firms in the world just acknowledged Shiba Inu as a qualified digital asset for a regulated fund. Whether or not the token gets allocated, the door is now open. Stay informed and stay subscribed. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.